What's going on, everybody? Hope everybody's having a great weekend and enjoying the time away from the markets. Wanted to go through a quick analysis here of the S&P 500, the Spider ETF. Take a look at some things that have developed over the last week, what to potentially expect into the first part of next week, as well as some areas where we may want to engage the market, manage our risk. But of course, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. All right, so first thing we do, of course, before getting into the charts, let's take a quick look at the economic calendar for this week. And what do we have in store as far as that's concerned? So let's flip over to that right now and take a look. All right, Monday looks like it's a clean day. Nothing really scheduled here. But Tuesday, happy Halloween there. Consumer confidence coming out at 10 o'clock. And that's really the only thing I'll be kind of watching to see on that day. ISM manufacturing at 10 on Wednesday, November 1st. Job openings at 10 as well, and U.S. manufacturing PMI coming out at 945. And then, of course, we do have FOMC at 2 o'clock, and we have Powell on at 2:30. So Wednesday will be a big day. Keeping that in mind, we also just want to be careful on Tuesday, especially for any hesitation in the markets. We could also see a little bit of that on Monday coming into the FOMC meeting. So let's just be a little aware of that. So either way, Wednesday should be very interesting. And then we do not stop there. Thursday, we have initial jobless claims at 8:30, and some other data as well, U.S. productivity and unit labor costs. So that's not too much, but definitely want to keep an eye on the initial jobless claims. And then we do have non-farm payroll coming out on Friday, the 3rd. As well as services PMI and hourly wages and ISM services. So we definitely want to be paying attention to a non-farm payroll at 8:30 and the unemployment numbers. So that should be interesting as well. So easy start to the week, but Wednesday and Thursday, Friday should be interesting days as far as data is concerned. All right, now with that out of the way, let's move on to some charts, and we'll start off with the weekly chart here as we've just continued to sell down in the markets. And Friday, another red day, and triumph for the Bears. We were down about $1.87, about 0.45%. And we actually finally did hit our major downside target we were waiting for, that 410. We actually traded into the 409s, and so we surpassed our targets there, hitting all of them, the 415 and 412 and 410. So where are we now? Well, we're still in that very interesting area as far as retesting this major breakout area that we've already kind of been speaking about. And the main warning that we kind of were talking about last week is, as far as a swing trading position, day trading, of course, that's fine. We're downtrending, sure. But as far as, instituting and even think about it from the, the institution perspective, big money shorts, are really not going to be coming into this area too much, in my opinion. Just as it's such a high traffic area here. for the markets. And, we've already kind of been over that, this zone here. And actually, that should be a little bit lower. But you kind of, you get the idea of, the retest of this major breakout zone. And, we were also kind of watching and postulating about that potential cup and handle, right, that was forming. But really, for me, we've kind of broken this handle. This area might be the last stand for the bulls as far as having that potentiality. But we'll see. We'll see how price starts to react here. But for me, the cup and handle kind of starting to look is pretty messed up now and kind of starting to invalidate itself. Just in my opinion here. So either way, swinging short or looking to short right out of the market open, just because we've been going down, doesn't really make too much sense to me, and I'll be very cautious in doing something like that. That being said, what is logical, from the trend perspective now? Here, just looking at this weekly candle, obviously, just from that structural standpoint, we had a pretty, decent sized red candle. Again, very similar candle to last week's, in the fact that the bulls, they tried to, push price up, and were unable to do that. You can see the wicks where they tried to accept higher, pushing us back down. And, this week, though, they did put up a little bit of a fight from the buyers here, a little bit of a tail there, trying to push, hold price back up. So they tried a little bit, but either way, where we closed at 410. 68, pretty much in the bottom part of the range again. So that's still, it would have been, a little bit more, a little bit stronger of a close if we had closed just a little bit higher up. But they pretty much closed price right towards the bottom of the weekly range. So that's really not what you want to see from a bullish perspective. However, I still am on the table that it would make sense to see some type of a retracement coming in the markets. It's going to be tough this week. We'll have to see with FOMC. The Fed tracker is suggesting a pause at this next FOMC meeting, so we will see what they do. And if they pause, we may get some moves in TLT. We may see TNX start to cool off a little bit and see some reactions in the dollar. But how much, I'm not exactly sure. No one knows that. But that could, spell some relief to the markets, at least temporarily. Of course, there's a lot of structural damage, from the weekly perspective and daily, of course, that has been done. But that doesn't mean, of course, that, we've seen the market be very resilient at times, and, even potentially seeing some type of a move to the upside still is not, really out of the question. And in my opinion, kind of more favorable price action, right? It's not healthy market price delivery, for just keep dumping. Now, of course, anything can happen, but that's kind of an unsustainable move. So it would be more likely, in my opinion, to start to postulate and look for some type of either a daily lower high to be put in, or a weekly lower high to be put in before we actually resume the trend and continue down. So as I mentioned, now let's get over to the daily chart here, and we can also take a look at the high traffic area I was talking about. Right here, you can see this is our POC, and you can see all the volume being traded in this area, quite significant. So this is, it's going to be tough to really chew through this, this area, in my opinion. since of all this activity here in the market. So the other thing, just from a moving averages perspective, what else is also kind of going on here? We are also seeing the 200 now on the daily start to cross and curl over the 9. So I think that that's also very interesting to see. It hasn't totally done it yet. It's starting to, but we'll see how this kind of develops. And if this continues to cross over and start to slope down, that's not really what you want to be seeing as far as from that momentum perspective for the bulls. And we are pretty much at the month's close here. Maybe I'll wait to the weekend, to the midweek recap to kind of go over the monthly chart. But just taking a quick peek over here. We also have, I'm on a 5-year, but it is interesting to point out we do have the 5-year POC right here, which is very interesting as well. Just starting to break this monthly 20. We'll see if they actually close next the month below it, but that is very interesting to see. Let me just go back and bring this. I don't know if this is going to be how long this is going to be. It's just, okay. So no, that monthly POC is the same, but this is not enough. This is not enough data. Let's go with 3 years just to take a little peek. All right, so interesting here on the 3-year monthly, we are starting to get below that POC. I think that's kind of interesting. I think the main takeaway here, though, is to see whether we actually close the month below the 20. I have my doubts, but we'll see. It's sitting right now at 416.63, so that will be interesting to see how that plays out, and we'll look at that more in the midweek recap. But coming back to the daily here, all right, as I was mentioning, the 200 simple moving average is starting to cross the EMA on the 9. We are certainly below the 200 EMA. Again, I don't really use the simple, but I kind of just threw it on here because I know a lot of people were watching it, and a lot of big institutions, they do use the when they are looking at the 200, they do prefer the SMA over the EMA. I'm more of an EMA guy personally, but to each their own, right? So it doesn't really matter. But either way, this, we'll see how this develops. But where could we potentially retrace to, right? That's going to be the question right now, because if we want to find a short trade, where could that actually present itself for a better risk to reward as far as from a swing perspective. Now, again, I mentioned earlier, day trades is fine. We're trending down. Okay, that's a whole different, can of worms. But we're just talking about, where would new money shorts look to be selling the market in that case of a counter trend, and also to put in a word of caution that right at the bell opens, well, we're going to keep going down, and then you go in short, and then we counter trend the other way, and then you're out of the trade, and especially since we've been coming down so much. Just think about we've had 3 red days. Now, what happened last time? And we talked about this as well. Look what happened last time when we talked about that statistic. After 3 red days, what's the more probable, statistically likely thing to happen is to see a green day. And I wouldn't be shocked to see another kind of type of this candle here where we do end up, slightly green, kind of indecision. Maybe we make another green day after that. I'm not sure what's ahead of Powell's speech, exactly how the market is going to want to play on Monday and Tuesday. But just going back on that stat as far as being 3 red days in a row, okay, what's the more likely scenario? It's going to be to print some type of an up day. I do think still Monday usually going to be type of a range day where we're going to try to find what the weekly balance is going to be, and then we'll after Tuesday we'll have a little bit more of a range to work with as always. But Let's watch out for this type of scenario again here to be put in. Do we actually make a move up to the daily 9? You know, that could be a situation. We're going to be keeping a big eye on that 420, a whole number area. But we could potentially only come into the last 2 days of trading range. So, you know, maybe we only come up into the 417 area. You know, either way, we could come back up into this high traffic zone here of all these moving averages. This could definitely be somewhere where we retrace to, and that would be more of a daily lower high being put in. And that kind of has a nice confluence as well. And we were talking about that where we may retrace even, I think it was, you know, 1 or 2 days ago, in the mid week recap, that a retest of the so far what is the prior monthly, well, the earlier in the month, I should say, swing lows, right, from here into that basically that 420 area. Yeah, about 420, 420.50, anywhere in that zone. It could be another spot where we could be, you know, heading for a daily lower high to be put in, and then we make the move. We look for the move back down into the equal lows, right? But again, you know, FOMC, so we're going to have to see exactly how this plays out. So very interesting spot as well, just, you know, to have FOMC coming and where we are on the charts. Very, very interesting to be set up like this. So, all right, so let's go into. Okay, I think that's all I've got for this chart. The other thing that we are still watching, peaking still at those over sold conditions. We can get a little bit more extreme. Reading right now is -10. So I've seen it at -12, -13 before. So, you know, we still have some downside to get more extreme, but mentioned that before, we are still keeping an eye on how that is developing. And if we go back to the weekly chart as well, we're not quite there yet. Where are we at? -9 as well. So starting to dip in there, but look what happened last time here. In October we started, what did we read at that point? Let's just try to take a look. I think it was -8.5. So, but on the weekly, look, it's been down 11 before. But we'll keep an eye on how that develops as well. Either way, you know, just that perfect weekly bear flag for the pattern traders there, and just a weekly lower high, and we've just continued back down, right? And you can even, you know, if you wanted to draw and do a trend line from here, right? We just came back and retested that move. So, all right, let's get into some other charts and see what we can take away from those perspectives. Okay, where's my mouse? All right, there it is. Since we're on the weekly, let's see where we're at from the weekly fibs. All right, okay. All right, so some other levels here that we're going to want to pay attention to, and this is coming in from the October lows, right, to the swing high from earlier in the summer, and we have closed back below, and we're the 38.2 extension here. Not what you want to see from the bullish perspective. We were talking about that 420, but now since we have closed the week below that 38.2, not good. But what we could also technically look for, again, I don't know if we're going to get that retest to 420. No one does. But, you know, we'll keep an eye on it. However, we are already mentioning that 417 area as one other spot as well. We were just talking about that. So it lines up. Nice confluence here. What do you know that level is? It's the 38.2. So one could also postulate and also consider us making a move here and then continuing back down. Bears want to see us continue to accept price underneath this 417 for that final move into the 50% retracement, which would bring us down to 404. So, and this is obviously bigger picture, stuff. We are looking at the weekly now, but from my perspective, as long as we trade, it could come up maybe and kiss that 420 and then come back down. We'll have to see how the couple of daily candles close, and certainly how the weekly closes back under. But my next downside target, if we continue to trade underneath 417, and would be looking for that 404. So let's see about that. Let's now come into the fibs from a daily perspective and see what we can take away from that view. I think I'm pretty sure we took them out. I think we took out the whole range and I didn't update it. So let me see. Daily fib, where are we? Oh, okay, not quite there yet, almost. Okay, so from this view, it's going to give us a little bit lower. 415.50. All right, keep an eye on that. This 78.6 as well. I don't like that short. That short may work. I'll probably like that a little bit better on an intraday, for an intraday trade. Not as much for for a swing trade. I like the set of 417, 420 better for a swing trade. But as far as from an intraday perspective, that 415, 415 area, okay, we could see that trade up there as long as we don't accept. We may just ping pong from that and just right on this volume, this point of control here. So watch out, high traffic area. We could just end up like that. But if we do, what are we actually going to be really, hanging out, bear flag, and then we can make that move down. The other retracement that we were looking at was at 404. Okay, so this one's a little bit further down. So according to this, though, from this view, is staying trading under the under that 415. I'm still going to say 404. I don't know about 403, but from this view, 403.55 would be the next move down to complete the whole retracement cycle. So we'll see. Okay, so let's go on to what do our downtrends look like. Let's take a look at our downtrend channels, see where we are. We might have broken out of them. We're just hanging on to the last line here, and then we'll have to see if we continue the trend, and we'll have to, these will be invalid for a while, and we'll have to, until we get some more price action. But look where we are. This is another word to the wise about potentially not wanting to run into new shorts here. We're right at this trend line. We've seen multiple reactions here. So be careful, especially too from this daily perspective. Looks like we did a rebreak and a recapture. So here's just another thought to say, okay, do I really want to jump in short right on Monday? No, probably not. If anything, I'm probably looking a little bit more for that retracement. But we'll see how this plays out. Again, we've talked about that potential lower high to be put in. Oh, maybe we get a push up. And what is this? This is from this view. Where are we? The 30th. We'll watch. This looks like 413. This probably be more for a day trading thing. I don't like new money shorts even at 413. I like 15 and at the very least in 17 ideally. But 413, 412. So keep an eye on those areas, just to see if we do come up and bounce, and then just continue to trade in this next channel and continue down like that. But so far we've kind of been breaking them pretty smoothly. All right, let's get into one more, although this is not, that's not what I wanted to look at. Although this is getting more invalid now that we've really cracked this trend line. So I don't know how much more time we will be looking at this perspective. The only thing I will say though is here's the swing low. Let's see, where is this 414? Maybe from a day trade perspective, we could also look at that 1420 zone. And if you look at this weekly candle, and we do talk about this, so that's a little bit more than 25%, and maybe I should go back to the other chart and kind of point that out. But we could also be in, this FOMC is annoying, but we could see this right to here and then push back down. But the other thing really that I want, this is not what I wanted. I think it's this one. Okay, that's fine. Actually, let me is it on this week's range? No. Let me go into, where was the other one I was on? All right, whatever, we can use this one. Let's do it this way really quickly to look about this week's range or the prior week's range. Let me just see how this maps itself out. No, it's not going to. Hold on. No, that's gonna be the 38. Okay. Okay. Boom. All right, so what we also will watch out for is that 25% and 50% retracement of the candles range here. And so that's going to be more or less around the 415 area. See this? I'm just doing the body here because it's but let me get that up a little bit more. 415.50, and this one, in my opinion, 413 we'll call it, because that's the 23. That's the 23. Okay, so 413, 415. That's going to be about that 25 and 50% retracement within this candle's body. So watch out for that as well as some possible places where we could retrace up into, and we could see price, come up and then roll over from here, or even come up and roll over from here. If we actually do start to accept over that 50% retracement, okay, then we'll look at 75, and maybe coming and trying to trade up into the 418 area and a little bit above. But either way, either one of these scenarios may present themselves. So certainly something that I'll be watching for as well. All right, so let's get into let me get into some other charts here. Let me get a drink of water first. Okay. And let's go into some of our other charts. All right, we're going to start off with the VIX here. And Miss Vixie, Trixie, nothing's really changed. We're still just moving in this uptrend. We saw our lower high, our lower high get put in, and then we retraced some, came right into that 19 area, popped back up. Now we're just kind of hanging out over 20. So the same thing kind of still stands for me. We may see a little bit of sideways action here, but as long as we're still over 19 and certainly still above the 24th swing low, there's really nothing that's that bearish here from this viewpoint. We'll just look to see what happens and look for that higher high. Still, the short-term target on VIX to me is going to be around that 2350, 2360 area, unless we start to break down under that. Sure, for pattern traders, we can start to maybe make this argument, maybe some type of a potential rising wedge situation kind of going on here. Sure, maybe, but doesn't really mean anything to me unless we actually break this uptrend line and start to trade down lower. So if we do actually start to break under, okay, maybe, and then maybe we get a little trade up here, maybe a back test. Whoa, sorry. Maybe we get a little back test and then a move back down. That would be what the bulls would want to see. But until that happens, this, is kind of more or less meaningless to me. Let's see about that 19. If they can actually still hold 20. Otherwise, then we'll remain for more volatility to come into the markets. Put call ratio pretty much even, not at any extremes here. So yeah, nothing really. We're just above the 1. So they are kind of coming up a little bit, but not really anything that's crazy extreme for me to say, okay, this can be one of our contrarian indicators. So nothing really there to speak of. Let's go into our new highs versus new lows. Anything going on here? Nope. Everything's looking still weak. We came down again. The one thing I will... no, okay, it's going to be on another one. Different chart. But we could still come up and back test anywhere in this 200, 250 negative area and then just come back down. I would watch for that. You could even make a little kind of, are we doing a little kind of head and shoulders type of situation here? Right here, shoulder, our neckline. So we'll see if this starts to even crumble more and kind of get below that negative 460 area. All right, if we start getting below that and start coming down, we'll keep an eye, and that probably obviously will be more blood for the markets. But from the breadth perspective, everything's still bearish. VIX still saying bearish there. Okay, so we shall see. Actually, I'm going to keep that line on here just to mark off that kind of low area, just to have it in our views. All right, let's get into some other actually, let's go into our other internals here. Didn't get a chance to do that. If I can actually grab them. There we go. Okay, outflows all pretty extreme here. Sectors were all down, but we were trading just all this sell volume. Not as strong as last Monday, but definitely stronger than the prior 2 days. Outflows very weak here. We didn't get down into trend lower zone on the ADD, which I thought was interesting. But we've spent most of this week trading below the zero line on the ADD. Let's see Monday if they open up at all below zero. Every time we've been above zero, it has not been able to hold at all. And same thing on the VOLD, just every time up, down, negative, sell. Let's see if they can even hope to hold anything. We'll see how that opens on Monday. But overall ADD was weak Friday, continuing, and VOLD as well, just weak and in the dumps. So sell, a lot more of that sell volume just being the theme right now. And of course, sectors just getting slammed all over. Interesting strength there in XLY though, and as the month ends, I will post and we'll go over how each sector performed this month. But we'll do that in the midweek video, a little sector recap of the monthly performance. All right. Oh gosh, hold on. Now I'm gonna try to turn down my gain because I might sneeze. Hopefully not. Okay. I think it went away. All right, let's get into some other internals here. What do we want to look at first? Let's go into our percentage of stocks trading above their 50-day and 200 moving average. Still down here, still down. The only thing I will mention, we made a lower low in SPY. But we have not made a new lower low in the SPX 550R. So there's a little bit of a divergence there going on with the markets making a lower low and this not making a lower low. And you should, I mean, I'm going to just draw it here, but you should be able to see it. It's pretty self-evident. You would think that this would have made a new lower low. Considering the market making a new lower low, but it didn't. This is one of the things that I would also point out to. Okay, we don't want to be jumping in with fresh swings short, but this would also a little bit of a bullish divergence here with this. So another thing that to me is kind of pointing towards, all right, maybe we'll get some type of a counter trend rally. Again, it's just a little counter trend rally. I'm not saying we're ripping back to 500 or whatever, but we don't want to get caught on the wrong side, too heavy and short, and then we get some type of a short squeeze that rips the market up to a 2% in a day, and we've seen that before. And now as we look at the amount of stocks trading in above their 200 period moving average, well, this is a bit of a sadder situation. This one has made a new lower low, where the 50 has not. We are getting real close to that kind of extreme level here from this viewpoint. So I will watch very carefully here as we start to come into this 24% down to 20%. Usually that's getting a little bit extreme, and where we may see some type of a reaction. I'm just going to mark off. It's basically 20 there. Mark that off. Anywhere in this area is very interesting. And you can see here where when we've come down into these extremes, we get big moves in the market. How sustainable that's the move is going to be, I don't know. But although this doesn't have the same divergence as SPY, as the 50 period moving average, we are starting to get a little extreme here, and we can also kind of start to see that here on our Momo as well. So we will keep an eye on this one very, very closely as it develops. So interesting bullish divergence here getting to a little bit of extremes. So here, two potential warning signs, or at least to build up a thesis that we may see some type of a daily lower high be put in, or a weekly lower high, and then continue the trend. We're starting to gather some evidence here that might be in the works. Especially, we got to see what Powell does in the Fed, especially if they start to pivot. It will be interesting to see how the markets take that and react. I mean, because obviously interest rates are still high, at the moment compared to what they have been. Let's go into some of our VIX internals here, looking at VIX futures. Now this one's a little bit interesting to me. We're trying to stay over that zero line. That's what the bears would want to see, but unable to do that. We're now back under the zero line and in contango again, and so this to me saying that we can't hold that over the zero is a little bit suspicious. And also, this, if it was above, we could also have a little bit more confidence in the more volatility being put into the market. But it cannot stay over the zero line. So this also is an interesting data point that could be suggesting, again, this might cool off a little bit, come down. We may see it in that, if this starts to cool, we're going to see, a move in the markets to the upside potentially. And we're getting a similar reading here on the VIX 9-day versus the monthly. Cannot get over the zero line. Very interesting here. So I would say this could be a data point for the counter trend. I believe this could be a data point for a possible counter trend move. And here, the VIX did not close over the 103, 105 area, or the VVIX, excuse me. This again, from the bearish perspective, you would want to have seen it close over 103, 105. It closed 101.04. Sure, I get that. It's close to 103, so it's kind of in a weird spot. But what could we kind of be making here? Maybe a little bit of an H, huh? That's interesting. So here is because considering we did not trade and we did not actually close, above that 105, 103. I think that this is another data point potentially signaling to me that we may see some type of move. Again, I don't know how strong it's going to be. Could be $1, $3, $4, could be $5 move in the other direction. I think these data points are suggesting that could be a possibility here, all things being equal, not really counting the Fed decision. So that's obviously the one canary in the coal mine for us, that it's going to make things a little bit tricky. But the funds, funds Fed rate watch or whatever is saying it's likely that we're going to pause. So how the markets again will react to that, I don't know. I think that's everything I wanted to go over as far as the internals. So we are good for that. New highs, new lows. All right. Let's get into some other charts here before we start to move on to our daily plan for Monday. Taking a look at TNX. Anything really to take away from this viewpoint? Well, not too much other than, we did try to trade again. Oh, well, let's just take this to the daily. We're just kind of stagnant here, right? Just kind of going back and forth, and, we tried to make a move up again, couldn't hold over 49, came back under. We're kind of talking about, this kind of just trading sideways for a little bit, and this kind of what we're getting here, just this back and forth price well, I can't really call it price action, but because it's the 10-year, but you get what I'm saying. Just kind of back and forth, not really making any decision in either way. So as long as this holds, I think that this could just be a prevailing scenario for a little bit. But who knows? Powell speaks, and this could drop down to 47 real quick. So we'll see. But all things being equal, like I said, as long as we're holding over 48, 48 here, nothing really too much to be, bearish about. Okay, if we start getting under 48, and then we could talk about maybe coming into the 20 here, and then maybe coming down to that next big breakout area in the 47s. So but everything, this can drastically change after Wednesday, and so I might wait to do that. I'm not sure about the midweek video. Maybe I'll wait till, if I do it on Thursday, we've only got one more trading day left. We'll see. Probably we'll do it after Powell and see how it looks. All right, what's going on in dollar land? Let's take a look. All right, same kind of story here. We have not been able to get over that 107 area. Just kind of doing what we were talking about, just sideways, kind of bullish consolidation here. Everything can change after Powell, but as it stands, as long as we're hanging out up here, really not below 105, there's really not too much to be bearish about yet on the dollar. Just still hanging out. Still cannot get over that 107, 106, 87 area. Came up to it on the 26th, could not get over again. Just hanging out. Came into the 9, back up. So just sideways, kind of like we postulated. Nothing really to report. Wednesday's update will be interesting. See if we're come down to this 106, 105 area. Okay, so let's move right along here. I really appreciate all of everyone sticking with the video and taking the time to prepare for the markets with me. And I hope that they are providing you with some value and some of perspective of what I am looking at and help you build up your own plans. All right, so let's take a look at some of our day trading fibs here. I've updated them just going off of the this week's past week's swing low. And what can we take away from this viewpoint? Okay, let's get a little bit of a closer view here. Okay. Now, all right, so as long as we hold the Friday swing low, sure, we could trade off of that. Really, what you would want to see from this viewpoint, we got to recapture 411. 25, we'll call it. Get back over this hourly 9 here. Okay, and then we can look for potential trades. We've got to watch out for this hourly 20 as well, but we could look up for potential trades up into that maybe 412, 412, 50, 412. 25, maybe 413. That would be a next spot, and that would also make sense to me. Retesting, you can see here, we hung out in the last session before finally breaking down out of this range, right? We hung out. We finally broke the range, and that's when we got to see that move to the downside from the range consolidation, range expansion, right? So even to think just from this viewpoint, from this hourly perspective, coming back up, retesting that range, and then maybe rejecting from there. So something to watch for a potential intraday short trade around that 413 area, probably at the money puts there, or maybe 410s. SPY is pretty liquid, so you can really pick even 411. I'm sure it has plenty of liquidity with a decent spread to be able to trade. But the 410s could work. Yeah, either one of those strike, 410, 412, 411, or that 413 right there as well. So that could work. We'll also watch here. It's 411.25 may just get stuffed. I mean, we saw it get stuffed here. It's real close to the swing lows from Thursday's session, so I'll also be watching that. And I mentioned that area 411.50. It's real close to that. It's just basically right in this area, right? 411.25, 411.50. Just keep an eye on there. If we get over, okay, then we can talk about 412.25 and maybe 413. But I would not be surprised, again, going into with Powell, Monday, hesitation. I wouldn't be surprised to see us trade in this range. So watch out. We may open up, come down, recapture, and then we see a bigger move up, right? Something like that could be what could be in store for Monday, and then we just reject, come back in. Let's just watch this range now. Coming into Monday, that 409 basically to 413. Let's see. But if we do start accepting over that 413 for whatever reason, getting a little bigger move, okay, then from this view, we'll be looking at basically Friday's highs and maybe coming up into that where's Friday's highs, basically 414.75 we'll call it. Maybe we get a move up into the 28 the 38.2 here, and another possible rejection area to come back down and into the 413, maybe even 414 area. So we could see that as well. But I would, anything can happen, but I would not expect more than that. If anything, I expect more this range to be what could be in store for Monday. But let's see. All right, that's all I've got for you for the fibs. Let's take a quick look at our balance zones and then close out the video and let the Halloween weekend get started. You can already hear people outside my window kind of partying it up. Okay. All right. All right. So the swing low, right? We're going to be watching 409, basically, right? As long as we trade over, ideally 410. Okay, then we can look for moves a little bit higher. You can see these swing low here from the from Thursday session. So we've already been over that. Going to keep an eye on that, but we could potentially trade up into from this viewpoint into about 412, 412.50, somewhere in that area. Possible short trade, but if we really start accepting over 412.50, okay, then same thing. Back to Friday's highs we'll look at. We really start getting over there. We're talking about 415, 415.70, 45, maybe to the top part of balance here at 416, 416.30, and of course we're going to watch whole number. So anywhere in this area, also possible short trade, right off of here. We talked about the fib range that could potentially be established from this viewpoint. This wouldn't surprise me either, just trading in this range, something like that. Okay, so that also could be what we see Monday and Tuesday. But if we do start getting over, then we'll look to trade a little bit wider in the range overall. And then if we do start getting over and start accepting, hanging out over here again, I don't know if we'll be able to break out over this area. As I mentioned, potential short trades, if we do get over, you can look for a potential short, that 415.45 area, 415 puts right there, boom. Try to look for moves down back into this general area. But another trade, of course, would be if we came into like 416.30. Again, from there, we'd look for the rejection. I don't know if that will bounce, and that could also be another scenario, right? Just bouncing there from off that 415.75, two potential pathways for price there. But obviously, as a bear, you would want to see this continue and break down. Another scenario, though, if we did trade into here, take the short, right, it could come back up, double top, and then make the move down. So a few pathways there for potential shorts, or here, if market internals are strong, you might not want to take that. If take that short, if that was the case, market internals were looking good. I would think to myself, maybe we come up here, it rejected. Maybe I would take this long here, with risk under 415, and then look to see if we can actually trade up any higher into Thursday's equal highs. Thursday's open right here. I think that's pretty much all I wanted to go over with you guys. I hope again that this has been helpful. If you haven't already subscribed to the channel, it would mean a lot to me if you do so. If you liked the video, smash that thumbs up, really helps the YouTube algorithm. Let me know what you guys think. Where are we going to go next? Do you think we see I think maybe I'll do a poll on Twitter. What do we see first, 420 or 400? I think that would be an interesting question. Leave your comments down below. I'd love to know what you guys think as well. Enjoy the Halloween weekend. I hope you guys have fun with your family and friends. And that's going to be about it for me. So, again, thank you so much for joining me. Remember, plan your trade, trade your plan. A prepared trader is a profitable trader. So let's have a great week and let's kill it. All right. I'm signing off. Have a great rest of your weekend.